Hello, Paul Gerrard from Price Accounting Services. Welcome back to this session. This time around we're going to be talking about body corporate strata levies. Now you'd wonder why I'm even mentioning this, because you would think, aren't they tax deductible for rental producing property? And the answer is yes they are, but not always. Now here's the issue. Basic strata levies are tax deductible, but there's a part of the strata levies that is not deductible, and that relates to what's called special levies. Special levies are made from a sinking fund for the purpose of undertaking capital works. Capital works could include things like very large maintenance issues associated with the building, such as concrete cancer, recladding, redoing windows on the facade of the building, all these sorts of things. And often they involve very substantial contributions by each of the owners to a fund, and then substantial works are carried out by the body corporate. These costs are never deductible because they relate to capital works. But there's an important thing to be remembered. That does not mean you won't get a tax deduction. Okay, so how does this work? So let's say you're a owner and you've been asked to contribute $40,000 or $50,000 for balcony and window works, and the total cost of the project's $2 million. The recommendation I give is that by all means, if you borrow that money, the interest on that new borrowing is tax deductible, so that's not a problem. The actual strata levy that you pay, the special levy, is not tax deductible, but it gives rise to a possible Division 43 enhanced deduction. What do I mean by that? Okay, I would recommend you get a quantity surveyor. If you've got a quantity surveyor report, you would get the same quantity surveyor, get their views and opinions, because what normally we would suggest is at the completion of those works, the quantity surveyor will amend the report to include the new works, the $2 million, and determine your share of that property, including the common areas, and you would get an enhanced deduction for those capital works. So admittedly only 2.5% per year, but it could still be substantial. So it's better than nothing, but it's not tax deductible outright. Some people will argue with me and say, yes, but hang on, the works were for concrete cancer, the concrete cancer's a repair, etc. Yeah, look, I would agree with that view, but this is where the quantity surveyor is so important. The quantity surveyor will be able to assess the nature and scope of that, and their advice may well constitute tax advice. And if they say that the works are solely and exclusively for rectification of damage, then it may be that that is the case, okay? So anyhow, we'll leave it up to the experts. We look forward to seeing you again. Watch our series concerning properties, and also if you want to watch any of our videos, you can jump to those specific ones, or just watch this whole playlist, watch the whole series. You can subscribe to our channel, and we look forward to seeing you again. Till then, bye.